Welcome back to Benchmark. In our Spotlight segment today, we talk to Claude Pieris, the Chief Executive Officer of Pan Asia Bank. At the top of the agenda, of course, is Budget 2012 and in particular, the banking sector's expectations this year, given the extensive changes made last year to boost the sector. We also discuss issues such as risk management, promoting the SME sector, the onset of another financial crisis in the Eurozone, and the entry of Axis Bank of India to Sri Lanka. Welcome to Benchmark, Mr. Pieris. So could you tell us what is the banking landscape like today? Where is the banking sector placed today?
Banks are playing a pivotal role in the economy of the country. Towards the latter part of 2010 onwards, the banking sector has contributed a lot by way of granting credit to private sector, which is essentially the channel to development. 1/3 of the economy opened up after the peace era, and banks are now opening up branches in the north and east. There are enough of untapped areas in the north and east, so more and more banks will move over there. The credit granted to the private sector includes areas such as tourism, leisure, construction and infrastructure. These will continue to take place.
Well, we've got a budget coming up. What are your expectations in big picture terms, and also what are your expectations for your banking sector?
The banks, as I said earlier, is essential for the growth of the country. We had seen concessions granted to the banking sector in the previous budget, and the banks use those concessions to strategize to further develop their own businesses as well as contribute to the economy. And I don't see the government doing anything to decelerate the ongoing process. And I think the banks will benefit from the oncoming budget.
Moving on to risk management, how are the NPL ratios in the banking sector these days? Is it showing an improvement?
Actually, the NPLs in the banking sector has come down from 5.4% to 4.5% in terms of the gross NPLs. In terms of the net NPLs, it has come down from 3% to 2.6% during this year. In our case, it has also come down from 5.36% gross at the beginning of this year to 4% by end of September. In the case of net NPAs, we seen it coming down from 2.6 to 2.32. We attribute this improved NPA ratios mainly to the strict credit monitoring that we had focused in our bank. In general, the industry ratio coming down could be for a couple of reasons, which also one could be that the low credit portfolio would have grown in all banks, which is the case, and also the credit environment has made credit quality much better.
Mr. Pieris, there's been a lot of rhetoric about SMEs getting fillip and being given a boost and things like that, but very little action somehow seems to have been done. Are the banks really doing enough to promote SMEs? And what about microfinance?
I believe so. There is a lot of growth in the SME sector seen these days, but I think banks can do more. Banks opening up in the north and east has created opportunities for banks to go into that sector in a bigger way. We ourselves have opened 7 branches in the north and east, 4 in the north and 3 in the east. When it comes to actual lending in the SME sector, what really makes it difficult for banks to lend, from what I see, the credit approving authority is in Colombo, whereas the branches in the real areas where they interact with customers are outstation. So when it comes to getting the credit approved on the SME side, they find that the customers generally do not have proper financials. So to do a credit proposal without proper financials, it's rather difficult. So it is more the business that you see which is run by the individual that the branch managers can assess. So to put his assessment on paper and get a proper credit proposal to head office to the approving authority is rather difficult unless you have a real expert handling the subject. So that process has to change, and we should have experts running in those branches typically to lend SMEs, or else we have to change our approving processes to expedite the credit to SME sector. Same applies with microfinance, because both these sectors, SME and microfinance, requires a lot of credit monitoring, essentially post credit. So unless you have the experienced people on the site, it's rather difficult to manage these loans.
Time now for a commercial break. On the other side, we have more insights from Claude Pieris. Stay with us. Thanks for staying with us. We now have more excerpts from our exclusive interview with Claude Pieris. Do you think the government and maybe the central bank and even other like-minded institutions can play a role in this regard?
No, what I would see is each individual bank coming up with their own strategies to tackle this problem. We ourselves are coming out with a solution for this, because there is a lot of potential, there is a lot of profit which the bank can also get from this sector, because most of these loans are coming secured. So the risk in granting SME loans is rather small compared to other corporate lending, where the individual loans on the SME sector is small, and even if any loan goes bad in in terms of value, the number is rather small. So individual banks should take up their own positions and counter this problem.
Well, there's been criticism in some quarters in this country that the banks are trading on very high margins and really not passing on some of the benefits to the customers. On the other hand, your sector is bound by regulations giving you little scope to innovate. Where do you stand on this?
Banks' core business is taking deposits and lending. So we need to keep a margin to make profit. But there are a lot of hidden costs involved when you have to mobilize deposits and do your lending. Quite a lot of expenses are incurred in terms of branch expansion, in terms of your IT solutions, in terms of credit risk management software, AML software, which is the expenses are very heavy. So banks have also take these expenses into account when they are doing the costing of their loans. Actually, when it comes to smaller banks or the bigger banks, the difference in terms of what you spend for technology is hardly anything, because irrespective of what the price is, you have to go for the best, because you need to manage your banking business in line with the local regulations and in terms of what is expected of you when you compare even with the international banks. So that is the costly thing for the banks. All in all, banks do pass on the benefit of low interest rates to customers by giving customers increased interest for their deposits. So that is, in a way, the banks do pass on their profits to customers.
Mr. Pieris, there's a very real chance that the US and the West will face a double-dip recession, which will only make matters worse. Are you concerned with this onset of a financial crisis, especially in the Eurozone, which may affect, spread to rich nations, and what are the implications it would have on us?
No, I think personally the worst is over right now, but we cannot be complacent in Sri Lanka, because it can bounce back to us as well. But as any bank is required to do, we should have more stringent processes and procedures, even going beyond what is expected by the regulators, in order that we attack this problem. So far, Sri Lanka has been doing well. We have had no problems. The economy is such that the opportunities to lend, which is actually the more critical part of the bank's business, and where credit, and if any crisis all starts with bad lending. So if we in Sri Lanka can tackle that problem of giving good quality credit in a good quality environment, which is right now the case in Sri Lanka, I don't see any effect of the crisis spreading over to Sri Lanka.
We recently saw the entry of Axis Bank, the third largest Indian banking giant, into Sri Lanka. How do you view competition in the banking sector? Is this something that we need, or is this something we could do without?
Competition is a good thing because customers tend to benefit from it. When it comes to actually foreign banks, most of the local banks at the end of the day follow the systems and processes which come down from international banks. Even regulations are in most cases are taken from the regulations prevailing overseas. So in that sense, when more foreign banks open up their operations in Sri Lanka, we as local banks have opportunities to interact with the foreign counterparts in Sri Lanka and come to know the best practices for us as well to use. So in that sense, the opening up more foreign branches in Sri Lanka actually helps us as well.
What are your views of shareholdings being concentrated in the hands of a few big players? Dhammika Pereira, for instance, is shareholding in Pan Asia Bank, Sampath Bank, People's Merchant Bank. How about the conflict of interest, and what is the impact this has on the stock market?
There won't be any conflict of interest as long as the shareholders maintain the regulations that are stipulated by the central bank. And I think the banking sector, in the banking sector, that's happening to the very core. So I don't see there being any problem in that regard.
In the context of allegations and counter allegations of foul play and the fact that investor sentiment has eroded, how do you view the Colombo bourse today?
These are basically the growing pains in any stock experienced in any stock market. Major stock markets have higher volume of liquidity and larger number of investors, and therefore any transactions which are considered to be questionable far between. Sri Lanka market is rather small, and regulations should be sort of drawn up such that the market becomes more liquid and much more investors come into the market. Probably we need to get more foreign funds coming into this country. The market, which was earlier driven by market sentiments, have now sort of settled down to fundamentals. Also, the smaller investors should be educated so that they would be aware of the pros and cons of investing in the stock market. I think that is something which the regulators should sort of take forward.
That was Pan Asia Bank CEO Claude Pieris. The Voice of Business is coming up, but before that, here are some messages from our sponsors.